Welcome once again, guys, to my YouTube channel. My name is Arnold from M25 Capital. This is a follow-up video on my first video that I dropped on supply and demand, pure price action. And here I want to continue and give an in-depth knowledge of how we identify and plot our supply and demand zones. Why are we most interested, or why are we emphasizing much on supply and demand? Is because the global economy, or the economics of the world, in every trade and business, price is moved simply by supply and demand. Between buyers and sellers, they're the one who push price to and fro. So in order for us to benefit or to make profit in the Forex market, we need to move with the market. We need to move in the direction of the market, either with these buyers or with the sellers. So number one, the first way of identifying and plotting a zone is simple by identifying the pivot points. Okay, before I explain that further, what I want to share with you is that you need to make trading as simple as possible. Don't complicate it. It doesn't need to be complicated. The more you complicate it, the more you will trade emotionally, and the more you trade emotionally, the more you are unable to make rational decisions in the market, and that will result in losses of your capital. So having said that, the first thing that you do when you open your chart on your MT5, on your trading view, on your mobile phone or on your laptop, is to identify exactly what you see on the screen is what you're going to trade. What I mean by that is you have to see where the price is going. Like, for example, this is a gold asset. As I'm looking from my left to my right, I see that from my left, prices was going up. So buyers were in control, and there was a pivot point, a turning point of price there. And sellers took on the bears and pushed the price down. So what I mean by that is already I've seen that there is a starting point, a baseline or the floor, the demand as you want to call it, or the support. And there is the ceiling, the roof, or the resistance, or the supply zone as you call it. So this is the first thing that we see, the highest points and the lowest points. So our plotting our supply and demand zone is just that easy. I'm going to pick a tool, a rectangle tool here, and I'm going to plot this as a zone like that. So what you need to bear in mind is that when you're plotting in the zone, when you've identified your high, your highest point, you use the edge of the candle body where the body is ending and the wick. So right where the candle body ends there, you put your rectangle there up to where the wick ends, like that. That's your zone. Right. Then we do the same with the bottom. So usually we encourage you that you spot the first top and the bottom. I'm gonna plot using this. The first top and the bottom. And like that, we have sort of a guideline. We know that the price, we expect the price to be moving inside these zones. Okay, like that. So what you do is you go into a higher time frame and you're analyzing. Why a higher time frame? Because the lower time frames respond to the higher time frames. This is what we call the bigger picture. Like, we need to focus on the bigger picture. Don't worry about the small moves that are being made on the 5-minute chart, on the 15-minute chart, unless if you're a scalper, then you should focus on those. But if you're a day trader or a swing trader, we advise you to start off analyzing on the day chart, get the bigger picture, the major direction of the trend, and then on the smaller time frames, you look for entries along the direction of the bigger time frames. For example, as you can see here, what we just said is price came from that zone there and went down there and formed a W there and is pushing back up. So on the supply zone here, we advise that you only look for opportunities to sell the market. This is your point of selling the market on this place. Look to sell the market in these areas. Never buy into resistance and never sell into support unless and until the support has been broken or violated. So you are always looking for buy opportunities on the demand zone. This is the demand zone. You are looking to go up on the demand zone, and you are looking to go down on the supply zone. So remember, never ever buy towards the supply zone, nor sell towards the demand zone. So when you're seeing price approaching this zone here, never jump in and say you're already too late. Wait for the price to give you a signal on this zone, whether a breakout to confirm a further downtrend after a retest, of course, or a pullback back up to the demand zone. As you can see, this is a fresh zone, and this is how one of the things on how you determine the strength of the zone. The lesser the tested, the stronger the zone, and the more the tested, the weaker the zone, and it will break anytime soon. So I'll show you that on the GBP USD pair, what do I mean by the strength of the zone. So you need also to be able to determine the strength of your zones, if the zone is still going to hold or is now weak. So again, we also advise that you find another middle point where you can plot your zone, identify your turning points, and plot your zone. So we see that price pushed here and was quickly rejected here. So we expect that this is a major zone that we find in the middle there because of that wick that is there. So after plotting like this, we can see that the price came here, tried to break and failed and go back, went back inside, but still playing in this zone. There is pressure for buyers here, trying to push the price back up, but they failed. Sellers took in and pushed the price back down, and so forth. Buyers came in, and there was a backley, and eventually the sellers were in charge. Why? Because this was a major high, and prices to correct and go back down where it came from. So that's why price came and reached this demand zone, and now it's looking back up. We might be looking on another fresh uptrend like that. So besides this, after plotting your supply and demand zones, you can go back now to a lower time frame and look for your entries and where to enter. But now I don't think I'll be able to cover entries in this video. I just want to cover the ways of how to plot and identify your zones. So let me go back to a day chart. Right. As you can see, these are horizontal supply and demand, and you can plot then your trend lines. You can plot your trend lines like this. Right. So like we said, we believe in 2 touches to make a trend line. 2 touches make a trend line. 2 touches make a trend line. So here we have this first touch there, second touch there, and our third touch there. 1, 2, 3. Then we have got 1, 2, and 3, and it broke out. Just a fake out because there was a zone here. So a place like this is very strong, where the diagonal supply or resistance meets with the horizontal supply or resistance. There will be more pressure from the sellers at a place like this. So you see that on these places, we'll be looking for selling opportunities. Now, also bearing in mind that you are coming from that demand zone. So these are the pullbacks that you'll be waiting for to go with the direction of the trend. And if you are scalping or if you are trading pullbacks, we can look to enter buys on these spots there, like that. So as you can see, that's the picture that we have. And the price here, the anticipation is that price will continue to come here before it goes up. We'll see about that. So we can come here and plot and try to see what structure is being formed there. Okay. Anyways, enough about this. Now I'm gonna go to second method of how you identify and plot your zone. Second method of identifying and plotting your zone is looking for places where price ranges for several bars, and then it dramatically shoots away. So when price ranges for several bars, then you see a sudden shoot up of prices out of that range. That range becomes your zone. You can plot that range and make it become your zone. Let me delete this right, so that we can start afresh. Okay. Now, method number 2 of identifying and plotting zones is look for areas where price is ranging sideways for several bars. Look for a range of price, then you see a dramatic shoot out of the price. So for example, in this area, price was ranging here for several bars, then dramatically it shot up out of this range. So the next time price comes to this zone, it will reverse. So this now becomes a zone like that. You can draw this and cover this like a zone like that. As you can see, there you go. That. Right. So what you see is that the price was ranging in this for several bars, then it shot up. So what you do is you wait on this area with your pending orders, or if you do market execution, you can set your pending orders here, stop loss below, but when price reaches here, it will bounce and go back up. So this is another way of plotting a zone. You can look for those areas, look for these areas where price is ranging sideways for several bars, then it automatically shoots away. Next time price comes to that zone, it will definitely reverse. So we have another range here. It's another range here. It's just ranging for several bars. It's a range. Then all of a sudden, we have a price shooting up all the way. So if you pull this all the way, you will see what we mean. There you have it there. Usually they work hand in hand and together, the pivot points and this. So as you can see here, this was a pivot point and also a range, and we had price shooting up away dramatically. So that marks your zone. So this is our second method of identifying and plotting your zones. The third one is the use of gaps. Price usually gaps when there's too much momentum or there's unexpected economical events that happens. So if you see a gap in the market, fill that gap with a rectangle like this. Here there's a gap here, price jumped here, as you can see. Price gapped here. So what you will do is we fill up that gap with our rectangle. But usually the success rate of this one gaps is not that much compared to the pivot points. So as you can see, this was the gap, it gapped up, came into the gap, ranged, and went back up. Again, it respected this one, shot back up, and then came down and went up. Usually my favorite is the pivot point and the price range. I'm not keen in trading gaps, because sometimes price does usually come back to the gap. Like you see here, there was a gap. So you can fill this gap up like that. Fill this gap up like that. Mark it as your zone. So price came and tested this gap here and went back up. So this is the third way of how you identify and create your zones. So remember the strength of the zone. Let's go to GBP USD so that I can show you that here. GBP USD. Determining the strength of the zone. The lesser the tested, the stronger the zone. And the more the zone is tested, the weaker it becomes. So as you can see, this is what we have here. This was a fresh zone there. The pivot point price came in, player there was kicked out. But this year, we have a price ranging in several bars and the price shooting away. Price ranged here for several bars, then dramatically shot away. When price came to this zone, it reversed. So here we place our buy limit orders here and our stop loss at the bottom there. So you see price respected this zone and went back up. And it's 1, 2, 3. It came here again, touched and went back up. But now this has been tested many times. So we expect that anytime the price can be pushed further down because this zone has been tested so many times. So it's no longer strong as it has to be. So this momentum of this candle and the close of this candle will determine if this zone is broken or not. If we close outside here, if we close outside this, if the candle closes outside here, like this, what we will expect is a pullback to test that zone there. And this one now becomes our supply zone. So when the demand zone is violated or is broken, it turns into a support, into a supply. And when the supply zone is broken or violated, it turns into a demand zone. So we expect price to push back to that level there and then continue going down. So what we can do, we can project how this price will play by connecting that and that, like that, and anticipate that maybe we might have a spike to that trend line or to the zone. Excuse me. Then a push down somewhere there. So we are not anticipate that price will just go like this. This is a probability for this price will play. So 1, 2, expect a third touch there, 1, 2, a third touch there before it goes up, or it might just continue falling out like that. So these are the 3 ways that we have of identifying and plotting the zones and trading supply and demand. This is how easy it is, and we can do this also going to a 4-hour time frame. To a 4-hour time frame and look for entries on a smaller time frame. So 4-hour time frame. 4-hour time frame. You can do the same on a 4-hour time frame or on an hour time frame and plot the zones that you see and wait for price to get there on your zones. But now the reason why you to plot these time frames on smaller time frames, that there's too much noise, there's too much movement on smaller time frames. That's why we say you need to focus on higher time frames and get the bigger picture on where price is going and go with the flow of the direction. Because if you plot your zones on the smaller time frames, you'll find that you have too many zones clustering your chart, and that will lead to too much confusion on your side. So you don't want to trade with confusion, not knowing what to do, where price will turn or whatnot. But you need a simple clarity, the bigger picture, and to avoid the minor zones. There are minor zones. We see that price is turning in each and every price level, but they what we call minor zones and major zones. And we determine those by plotting our zones on higher time frames and ignoring the lower time frames. Right. I hope everything is clear and it's understood. So on our next video, we're going to talk about the true psychology of trading and also how to take entries using this method. Pending orders and market execution. So now it's going to demonstrate on our next video. Thank you so much for tuning in. Please subscribe, share, and comment for more. I'm out.